are going to be looking at these 4 pairs. So we can just start with US30 and then just continue with the rest of the pairs. So let's check US30. So on Sunday, I think, let me just double check the date. I am not good with date nowadays. On Sunday, it was the 15, and price was here. So if you watch the our Sunday forecast, we expected price to drop, and then these highs, this is also where we expected price to come back and respect, if we were going to respect this area, to push back up, which we did. That's why on Monday I said, if you traded on Monday and catch this move to the downside, or even catch this move to the upside, like and then you catch this one also, it was supposed to be done for the week, you know, depending on how you trade. But those moves were the nice moves to catch. So on Sunday, we had this high, which was this one here. Just quickly show this here. So this is the high we had on Sunday, and then we expected price to push down, and then it came back. We retested this area, and then we pushed back up, and then we said we're gonna see how price is going to react to these highs. As I mentioned on our previous Friday session, that I always pay attention to what price is gonna do to the previous high or low, right? And then we saw that price. We saw that price respected this area, and then we started dropping again. And then this became now a place where I started paying attention to, you know. And then after that, I see price that broke, and then we came back, and then we started rejecting, right? And then these rejections to me were a sign for a sell, but then I didn't trade on, because I only traded yesterday when I took the sell around here. Otherwise, for those that traded on Tuesday, I think this was on Tuesday, 16, Tuesday, yeah, 17. This was a sign for sell on Tuesday, and then the market just tanked. And then same thing here. After the market gave us this structure to the downside, lower highs and lower lows, that this was a sign for us to start selling, right? So as I mentioned on the group, that the 2 tips that I can give you guys is follow the trend and then buy low and sell high. Wait, buy low and sell high, yes. So after the market on Sunday, on Tuesday, came back, gave us this area, started rejecting, and then we pushed down. We saw this momentum, and then that was a sign for us to sell. So the only thing we waited for after price did this was for price to do what? To come back, give us a high, and then we can start selling, right? But then price didn't do that. Well, price did just continue pushing to the downside. And then when we got this high, that's when I started entering on yesterday, which was yesterday, and then I started selling here. And my tip was hit, and then I was done for the week. So I only took this trade. Sorry, let me just clean this quickly. So I only took this trade this week. Let me just use this one here and this one here. Yeah, it was a 2% trade. 2% trade on both of them. So just following my plan, and then that was it. And I was out. So that was it on US30 for me this week, right? So after we broke these lows, as we mentioned on our Sunday video, that after we break these lows, the only thing we're gonna start looking is for sells. And then if you have watched our market structure, it also said it. We also mentioned that the moment the market start giving you signs of lower lows and lower highs, that means we are in a downtrend. When we are in a downtrend, what do? We are looking for sells. So that's why I started looking for sells. And then the reason I sold here is because I saw that we're having this rejection, And then after price pushing to the upside, we expected at least price to push back. At least we're gonna see if when we get here, are we gonna continue with this bullish momentum, or are we gonna respect the previous high, which we respected, and then we got signs to go to the downside. And that's why we started selling on US30. So that was it on US30 this week. And as you can see now, we have these lows. This was yesterday, and then price push up. We got this lower high. We came back, gave us a double bottom, and then today we start pushing back up, right? So we can start on, yeah, it's Friday today, so the market's gonna close anytime soon. So on Sunday, I will update you guys on what to look at, and then we're gonna take it from there. For now, this doesn't exist to me because it's already violated. We always focus on what the market is showing us now, right? So that's always the tip. So now let's, do you guys have any questions on your statement? Let me just open the chat so that if you don't have any questions, you can just type a one. Yeah, type a one if you don't have any questions. And then if you have a question, then you can just type your question. We want to be moving to Nasdaq if you guys don't have any question. Nas 100, Nasdaq. Wait. Not this one. I already have it on my watch list. Geo. There. Same thing on NAS, as mentioned on Sunday. Sunday was the 15th, so this was around here. So as mentioned on our Friday session, that always pay attention to what price is doing to the previous highs, right? And then after we notice that price, after we notice that price is rejecting here, which was last week Friday, and then on Monday, on Sunday, price just tanked to the downside, which we expected price to come back to this area. I think this was around 15,000, and then price came back to 15,000. If you go to lower time frame, you will see that, price started rejecting, and then when price rejected these areas, we expected for what? We expected to buy the market, and that's what happened. The market pushed the upside. I didn't take this trade, but some of the guys did take this trade. And as you guys can see, we had the drop and then we had the buy. So this is one of the reasons I said, if you took these two trades on Monday, it was supposed to be done for the week, because US30, we had a drop, which was a nice sell, and then we had the buy, which was a nice push to the upside. Same thing on Nasdaq, we had a nice drop, and then we had a nice push to the upside. And then, as we mentioned, if price doesn't break our highs, we also, there's a video that I posted on YouTube, how to trade a ranging market. I also reshared that on the public group this week, because I saw that price was starting to respect the highs. And then price respected the highs, and then we start pushing to the downside. And now this was another nice sell to take, because price was respecting the previous highs, right? So if you, let me just clean this quickly. Okay, so this is what we had, and then this is what we had, right? So we're in this range. We have the lows, we have the highs. So what do we do in a range? We sell the highs and then we buy the lows, you know. So it's TP hit, and then TP hit, and then you wait and see what the market was going to do. So these were signs for sells, getting too much rejections on Tuesday, and then price just dropped. Same structure as US30. And then the only thing I would have allowed me to sell again on this market was the market to come back, give me a lower high, so that I can sell the market, right? Because now structure has changed for me. We are in a downtrend. The market is giving us lower lows and lower highs. And that's what happened on Nasdaq, and then price dropped. So I didn't trade Nasdaq on this week, I only traded US30, but some of the guys did. If you follow us on Instagram, you will have seen the screenshot that we posted there. And then we started rejecting. This was yesterday, and then we had this push to the upside. We came back, so respected this area. So the moment you saw these rejections here, and then when price came back here and started rejecting, let's see, now this is a bit high, didn't reach. So just delete this, doesn't exist anymore. So if the moment you start seeing rejections around these areas, that's a signal to sell. And then selling at this area. And then if you have watched our risk management video on YouTube, a 1-2-3 or 1-2 trade is very powerful, especially if you're going to be risking like 1% or depending on how much you're risking for on your account, right? So let's say if you had a 10K account and then you were risking 1%, which is going to be $100 to make like $200, right? And then this trade was a 1-2-3 trade, and then that means you're going to be making $300. You see? So, and sometimes the stop loss is even less than 1%, because you might see, you will notice that it gives you rejections and then it gives you enough like enough room to put your stop loss. But then sometimes just make sure that you allow price to have enough what do you call this, enough space to fluctuate or something like that. But just make sure that your stop loss is not too tight, because this is an indices and it is very volatile, right? So this was a nice 1-2-3 trade that you would have taken. And then today, where this drop, and then after this drop, price started rejecting. We had this spike to the upside, right? And then with the moment we started seeing rejections after, just quickly do this. After we have this push and after we got this push and then we started getting rejections, this can become your support, and then you start looking for buys. If you go to lower time frame, for example, you might have seen structure that you have used, that you might have used. There you go. And then depending on how you analyze the market, because there's too many ways to analyze the market. So you might have used a trend line, you have to cut this buy. And then for those that trade pattern, I don't know how to trade how to draw the pattern around here, but the trend line at least would have give you a buy. And then as I mentioned, a 1-2-3 or 1-2-2 easy trade. And this is a 1-2-2 already. And then this is a 1-2-3. As you can see, price is still spiking to the upside, which is around 1-5. That's about 5%. So risking 1% of 10K, and by now you'll be floating around 5%. So this was a nice trade. And if you do watch our Sunday focused, it will be easy to catch some of the trades during the week, especially on Monday. Especially on Monday when the market open, right? But please be aware of the spread. Sometimes the market gaps on Sunday when it open. So please be aware of that, and then or just wait for the market to move. For example, on this move here, on this move here, we had this range, right? And then we know that we buy the lows and then we sell the highs. So if you missed this sell, at least when the price started rejecting here, you know that, okay, cool. You can buy this stop loss below here, your TP at the highs, and then TP hit, you're done for the day. That's it, right? And then if you want to hold this, at least wait for price to do what? To break. Remember on Sunday, I said, I'm only going to start looking for buys if price continue to break around these areas. But then if we don't break this high, then we're still gonna be looking for sales at these highs, and that's what happened. So that was it on Nasdaq. Do you guys have any questions? You can just type on the chat box. Wait, where is my chat box? Disappeared over there. You can just type there a 1 if you don't have any questions. If you have questions, you can unmute yourself, or you can just type. Okay, cool. Let's go to gold. Gold. I'm typing gold now in the chat. Okay, let's go to gold. Same thing on gold. If you watched our Sunday, this week was like this week was more like a 100% win rate. If you only just follow the trend. So we had this drop, and then we missed this buy, but then we saw the price was moving. I think price was around here on Friday, and then on Sunday, I said at least we have 18,000 that we can expect price to push to. Let me just move this to the left hand side so that I can see price. And price didn't reach 18,000. But if you go to lower time frame on these rejections here, if you follow the trend, you would have made money. Right? You would have made money. This is plus minus, I think 100 pips, or let me just see. Yeah, 180 pip. Same thing, if you're risking 1%, this was a nice 1 to 3 or 1 to 2 trade, depending on which risk you're gonna be taking, right? So this was a simple trade for a buy. And then, as mentioned on Sunday, that we expect price to react around this area, and then we're gonna start looking for what? We're gonna start looking for sells, and then price did react, and then price dropped. So same thing, right? If you trade patterns, I just want to show you guys on how you would have catch these in different ways, you know, because sometimes other people trade patterns and other people trade what do you call this, and they use trend lines, right? So this is more like a head and shoulder. So you would have missed this, but then when price came back, you'd have caught this and then sold, right? And then what was your target? Remember, you're always targeting a 1 to 2 or a 1 to 3. And then let's see, that's already 3.5%, but we only want 2% from the market, and then you're done, right? And then the other thing that you would have target is these lows here, and then you're out. That's how you would have caught that sell if you missed this buy that we discussed on Sunday. And then if you watch the video and paid attention to this area when price started rejecting here, you would have caught this one here if you missed this one here, right? So there's too many ways to catch this move. And the other ways, let me just see. I see a trend line also, but I don't know where to start with the trend lines. They confuse me, but something like this. I don't even know if it's accurate or not. It is. Let me just go to 4 hour. I'm out vitamin supplements. I'll be. Let's go to 4 hour. Let's see. I'm not good with trend lines, so I won't lie and say you would have thrown there or there. So, but the head and shoulder, you would have caught that one. And then with a 1 to 2 or 1 to 3, then you're out of the market. The biggest mistake I used to make, and a lot of people that make when they start, is you would sell here, nice trade. You risk, let's say you over leverage, standard lot size, and then you hold. This is almost about 125 pips, but yet you're still expecting price to do what? To continue dropping, because you see this history, right? So that's why I say if you only focus on what the market is doing now, then you would pay attention. Let me just remove these drawings. You would pay attention to these lows here. And then you would have seen this head and shoulder. And then you see rejection, and then you sell. The tip is there, 1 to 2 hit, and then you're out of the market, right? And then you wait. After that, you will notice that price started consolidating, started to come in a range, and we had this one here. We still have this area, right? We still have this area. So because we haven't break it yet, so we still respect this area. And now we had these lows. We broke them. And then we had these lows. Price pushed up, came back, and then we broke these lows. So now what does this mean? Now, for me, with this rejection on this support and this rejection here, support has been created, meaning that if I get a rejection around these areas, after getting this rejection here, there's a high chance that price might push back up. Do I know that? I don't know. So the only know for me to find out is doing what? Is taking the trade, right? So you just take the trade, stop loss below structure with your TP at the highs. Yes, we have these highs, but what is the current highs that we see now? Is this one here. So what do we do? So we put our entry there. Sorry guys, this is a bit messy. That's how I normally analyze. So let me just quickly make this nice for you. So that you can see where I am at. So we have these highs there, and then we have these highs here, right? So price is rejecting here. Stop loss below structure. Just move this. So stop loss below structure, and then we have our TP at our highs. There's our 2%, and then you're out of the market, right? Can you see? Out of the market. So gold would have given you 3 trades. One on Monday, you missed it, it's fine. You missed this one, it's fine. You catch this one, you hit TP, and then you miss this one, it's fine. But then you catch this one, you hit TP. If you miss this one, okay, cool, it's fine. Don't stress about it. Don't stress about it, and then don't let FOMO get into you. Because now, remember, as I mentioned on that YouTube video, that the moment the market starts ranging, that's a sign for what? To sell the highs and buy the lows. The market started respecting the previous highs, and then what do? We sell here, right? And then this is a bit high, but let's see if it meets our plan. So let it meet our plan, because now this is 1 hour, but on 15 would have met my plan. 15 met my plan there, 2%, right? And then I'm out. So to be honest, after this rejection here, I would have been taken out on this first trade, because now my stop loss would have been here. And also remember, keeping in mind that we have this high. Let me just go, this is 15. Let me go to 1 hour where you can see this clearly. Let me just remove this thing again. Let me just remove those things again. Okay, so there we go. Lows, highs, highs, highs. When price was going up, our target was 18,000, right? But we didn't get to 18,000. We started rejecting around here, and now price is pushing down. So we pushed down, we got this chance, we sold, right? And then these lows are broken. So, sorry. So when we sold here and hit TP, oh, we missed this one, but we bought here and hit TP, oh, we missed this one, and then price come and reject here. We know that we have these highs, right? And then we know we have these highs, right? So until we break these highs, to me, they still exist. If we don't break them yet, let me see the chart. Sorry, sorry, my Mac moved. Can you guys hear me clearly now? Okay, cool, thanks. So for me, until these highs are broken, I still pay attention to them because there's a high chance that price might go back to, right? And then this first trade, let me just quickly show you that here I would have been taken out by this week if I ignored if I ignored so now when I go to 15, everything looks different there and there. Let's go to 15 now. So if I ignored this high and then I ignore this one, then I would have been taken out of this trade, right? And then targeting this about 4%. So I would have been taken out. And then after being taken out, if I start looking for a change of direction, what reason do I have to start looking for buys? There's no reasons. Why? Because we have these highs. Did we break them? No, we just came back and tap, and then we started reversing. So for me, there's another sign to do what? To continue looking for sell. I was just too early on this one, which I accepted the loss, and now I'm entering again. Sorry, entering again, looking if it meets my plan. A 1 to 2. Okay, cool, that's fine. 1 to 2%, and then I enter TP hit, right? Selling the highs again, selling the highs, and then TP at the lows, right? Simple as that. And then same thing again happened. The market started rejecting here, right? And then we start pushing to the upside. If you trade patterns like head and shoulder and inverse head and shoulder, you get this right, left shoulder, came back, we have a head, push back, have a right, right shoulder, and then we push the upside. You enter there, depending on how you risk. Stop loss either here or below structure to be safe. And then let's see. Okay, let me just delete my things again to make this clear for you guys. Okay, and then let's see if this meets our requirements. And then, okay, this doesn't meet our requirements. If I put my stop loss here, but am I willing to risk and put it here? Let's see how it goes. And then I just do this. In such trades, I don't risk 1% anymore because I know there's a high chance that price might just spike me out and come back here because we have this low, right? So what I do is I just risk 0.5%, you know, of my risk, of what I normally risk. I risk 0.5%. So on a 10K account, if I normally risk $100, I would just risk $50 on this one, and then I take the trade, right? Making sure that if it comes back and spike me out and start giving me another sign to buy, and then I still have that balance of 50 to come and enter again, and then I buy the market again. And then if I'm taken out, then I'm done, right? So that's how it is, simple. And then we're still in a range. Until we break out of the range, we buy the highs, we sell the lows. If we don't break them, that means we're buying and selling the highs. So same thing happened, rejections, sell, stop loss above structure. Keep this in mind, keep this in mind. If you're taken out here, it's cool. You wait again and see how price is going to react here. If you're taken out here, you wait and see how price is going to react here, right? Same thing, price fell. Let's see if we get it means our plan. And then there. see. It's the, I don't even see now. There we go. You always have to be true to yourself. If it's too tight and you're taken out, you have to accept it. And then if it's too wide and then you're taken out, you have to accept it. For me, this is enough. 1 to 2, straight to TP, I'm out. Can you guys see how we would have caught gold in this small range this week? Only this week, right? Only this week. Everything that I'm sharing with you guys is on our YouTube channel. It's on our YouTube channel. The risk management is there. How to buy the highs, how to sell the lows is there. How to follow trend, higher highs, higher lows, lower highs, lower lows, higher highs, higher lows, and lower highs and lower lows. Yeah, it's there, you know. But for more things into detail, we have a course that we teach, and then that's why we go into detail and teach you everything, and then we mentor you and be there. If you're taking losses and then you can't keep, and then you don't understand why you're taking losses, we're gonna be there and be we're gonna be behind you, making sure that you understand everything before you enter the market, what to look at, and then we minimize the things. Let's say if you take a lot of losses in a range, and then we can teach you to stop trading the range and then focus on what you normally make money on, right? If you normally lose money on such momentum moves and then you make money on range, and then we kind of teach you to focus on what makes you money, right? So that kind of helps you also on your trading plan. So that's why I say if it meets my plan, then I'm taking it. If it doesn't, then I don't, right? And then so that was it on gold. So let's go to GU. Oh, sorry, do you guys have any questions? If you don't have any question, you can just type a 1. Okay, cool. Let's go. Let's go to GBPUSD. Trading is easy, guys, as long as you keep it simple. I know there's a lot of ways to what do you call this, to analyze the market, but does it work for you that way? Does it work for you? If it works for you, then minimize the rest of the things and use what works for you. Don't try to include everything that you see out there, and then because that's going to confuse you, then you won't know what works for you and what doesn't. So GBPUSD, same thing, simple structure that we explained. Sunday, we were around these highs here. Wait, I'm lying. There. Yeah. So we had this range. If you saw GBPUSD, no, if you saw Nasdaq, this is the same structure as Nasdaq. We were in a range. We didn't break the highs. We kept respecting them. We broke. We got another lows, which we respected the highs again, right? And then this was a buying area. This was a buying area. This was a selling area. And then we tanked. And then on Sunday, I said, if we break these areas and come back and retest around here, what do? We're looking for sales. That's what happened. And then price tanked. There's nothing more I can say on GU. Straight, simple as that, right? We're just following the trend. The trend was going to the downside, and what do? We're just looking for sales, right? When the market is in a range, what do? We sell the highs. We sell the highs, and then we buy the lows. Simple as that, right? For swing traders, this was a nice trade to swing, because if you caught this on Monday, wait, I think Monday, 16, it was on a Monday or Sunday, something like that. Yeah, I don't know. But if you caught this, because when the market opened, we also discussed this on the Friday session last week, that we're expecting price, we're seeing price rejecting here. On Monday, if we reject, we're going to sell this. And then we sold. And this was a 1, 2, 1.9, 2% TP hit, 3%. If you swing this, you're currently floating on 8%. If you swing this, you're currently floating on 8% for this week. And then you can close because your TP was supposed to be at these lows, which was hit. Simple as that. If you didn't catch that move, and then this is where you would have entered. And then your TP still got hit. And now you're currently floating on 3.5%. And then you're out. Simple as that, right? So that was it for this week. Nothing major, nothing difficult. I know I keep on saying nothing difficult, but for other people who are still learning, and then it's kind of not easy for them to understand. But if you just keep it simple and then you just focus on what works for you, then it's going to be easy. The most important thing that helps you to understand what works for you and what doesn't is doing the journal. If you don't journal your trades, you won't know. But then if you do journal your trades, then you will know what works for you and what doesn't work for you. Simple as that, guys. So that was it for today.